Hello everyone, thank you so much for watching. For Group D, distribution was announced on 10/23, which was Wednesday, and payment was made on 10/25, which was Friday. So those of you who invested in Group D ETF probably got the payment before the market opened on Friday, which is 10/25. Now, if you look at this number of ETF, there are 10 total altogether on Group D. Let's exclude the weekly one and look at the 8 monthly one. Now, the rate of return on each ETF is totally different, right? So if you invested 5,000 or 10,000 MSTY, your rate of return will be totally different than what you will earn when you invested in Apple, right? Apple or AMZY. Now, did you buy the right ETF or did you buy it at the right time? Because there are two factors that really affect the return on your investment. Number one is which ETF you invested on, and that's number two, when did you buy it? The timing and the ETF itself have a major impact, or it is actually those are the only two factors that affect the rate of return on your investment. So what I'm going to do in this, they say garbage in, garbage out, right? So the result, the outcome of the result depends on the quality of data you use to make your decision. So in this video, what I'm going to do is I'm going to look at three different strategies. Number one is the best case scenario. What I'm going to do is I'm going to say, okay, let's see if we buy it at the low of the week and sell it at the high of the day, which is on the payment date. How much would have we make? So that will give us an idea of the maximum gain that we could have made on any single ETF, right? I mean, like all these ETF, you look at it. Number second is the worst case scenario. Let's suppose, we are the dumb ass. We just buy the high of the week and sell low of the day, and we just lost money on that. So I want to see what is the worst case, right? So we want to take a look at the best case, the maximum money that we could have made, and the worst case, the maximum money that we could have lost if we had made a bad decision on choosing the ETF or the timing of it. And the third one is the one that is actually the regular strategy that I use all the time, that just buy a day before distribution and sell on the payment date, right? So these are the three strategy that we will be looking into this particular video. But before I go into the detail of those analysis, one request. Please share, subscribe, like, comment. I am in a mission to have 1,000 subscribers by the end of the month. And just a few days left. Well, actually, I'm halfway down there. So if you can help me get there, I will really appreciate it. Oh, one more thing. I'm not a financial advisor. So I'm not going to tell you what to sell, what to buy, when to sell, when to buy. I'm a mathematician. So what I do is I actually test different strategy and see which one produces the best results, so you can actually use those strategies and make your own decision. So let's do this, right? So there are three strategies that we'll be talking about: best case scenario, worst case scenario, and then we'll buy it a day before distribution and sell on the payment day. And we will try to look at every single one of them and see, okay, which one produced the best result. So let's get started. All right. So if you look at that 336, there are 8 different ETF on Group D, right? So I took out those 2 weekly ones now. So here's what I'm going to do. What we're doing is, this is the best case scenario. We will be buying at the lowest price of the week and we will sell on the high of the day, right? Now, so every Wednesday distribution is announced and every Friday you get a payment. So what that means is every Thursday the ETF trade without the benefits of distribution. So if you have to buy it on those 3 days of Monday, Tuesday, Wednesday of the week, right? So that's why I have those 3 days, 10, 21, 22, and 23. So we will take a look at the lowest price of those 3 days. And since the payment was made on 25th, right? The payment was made on 25th. So we will be looking at the high of the day for the payment. So let's take a look at the MSTY. Let me just take this one out. So it's easy to explain. Okay, here it is. So let's take this one out. So we can start it fresh. All right. So let's take this one out here. So this one out here. Okay. Now, so we already know the dividend that was paid for every single one of them, right? So if you look at this, this is the dividend or distribution that was paid, right? For MSTY, it was 4.1981. So I put it over here, 4.1981, which is all right. So let's take a look at it. From date 21 to 23, the lowest price. Let's see. Okay, here you go. Let's go over here. Yahoo. You can go to Yahoo and let's click on MSTY. Is the MSTY on? All right. Yeah. So what I do is I like to go to historical data. It's easy to take a look at it. So you go to Yahoo historical data. So we're looking at the 21 to 23, right? Because 24 is the day the ETF is trading without the benefit of distribution. Right? So we have to buy between 21 and 23, the lowest price. Right? So this is the low. So let's take a look at 29.62 to 29.81. So 29.62 on October 23rd, right? 29.62, right? So 29.62, and that is on the 1023-24, right? No. So since we're investing $5,000, so from $5,000, so let's take a look at that over here. Okay, let's see, $5,000 divided by the price we're paying for it, 168.8. Yes, I know, we don't buy it in fraction, but just for the sake of simplicity, I will leave it as it is. Or a sale date, we will be selling it on the day the payment is received, right? Which is 10/25/24. Since we are the very smart one, so we're going to be selling it at the high of the day. So let's take a look at that on 10/25. On 10/25, the high was 28.39, right? 28.39. So what does that mean? That means, okay, how much our gain is? The sale price plus the dividend we earn minus what we paid for this one, right? So what that means is we made almost $3 on every single one of this. So what that means is if we buy MSTY, and we are just flipping it on a weekly basis, right? Even though this is goes to the whole month, but we are flipping it every week, right? We're going from group A to group B, from group B to group C, and group C to group D, and then from group D we will go back to group A. So on that particular week, if we bought that, we are the smartest one. So we bought at the lowest price of the week, sell it at the highest of the day. So the maximum we could have made is $500, right? That is the maximum that we could have made. With $5,000 invested in MSTY, the maximum could have been $500, right? Let's take a look at the other one. Right? The same way we can do with YQQ and all those other things, right? So what you could do is you can go to the Yahoo. Just go over here, Yahoo. Let's take a look at one more thing. Let's take a look at, let's do AMZY, right? AMZY, AMZY. You go to AMZY, historical data, and then on the AMZY, 10/21 to 23, the low of the day is you have 1917 on October 23, right? 1917 on October 23rd, right? And the high of the day on the 25th was 1897, right? So you can do the same thing for every single one. Now, what does it tell you? It tells you that if you would, okay, see, as I said before, right? All these ETFs are totally different, right? Not all ETFs are equal. Different ETF produce different results, and the rate of return is totally different. So what my goal is that I want to make the most of every penny that I have. I want to have the highest return on my income. So if I have a choice, which one will I do? Obviously, I'm going to go for the one that gives me the best rate of return, right? Like MSTY, $500. But if you want to know about the detail of the MSTY, I have a separate video for that. So please visit my channel and you will get the detailed mathematical analysis of MSTY, why it's so volatile and all those things. And the second one is SMCY, which is a super micro. And then you have this number 30 AIYY, and then all those other ones. Of course, we are taking the best case scenario, so we are not going to be losing money on that, right? So everything, pretty much everything is in green, but the best of the lot is MSTY, right? So that is the best case scenario. That is the maximum that anyone could have made on their investment, right? The $500, which is almost like 10%. That is not bad at all. Absolutely not. Now, let's take another one. Now, let's look at the worst case scenario. That is for, for if you're not that lucky, we end up trading at the wrong time. We buy the wrong price. We buy the high and sell at the low. So this is the one that, for unlucky people who sometimes end up losing money. So let's take a look at it. Exactly the same thing. The only thing that we're going to be doing over here is, here we look at the high of that these days. Here we're going to be looking at the low of these days. So exactly the same thing. What you could do is you can go over the MSTY, right? And go over, or let's go to, since I already have AMZY over here. Let's take a look at AMZY. Look at AMZY from 21 to 23. Let's take a look at it. What is the high of that price? So let's do the 21 to 23. High is this one. High is 1985 on October 22, right? 1985 on October 22, right? That's what you got. Now, what is the low of the day on that one? Let's suppose we are unlucky that we sold at the low of the day. That is 1876. 1876. So if we are losing money. So what does this really? So since this is the worst case scenario, right? I mean, actually, I should have had this not green. It should have been all right. So what does this really mean? Since it's the worst case scenario, so of course we have to lose the money, right? Because we are buying at the high, selling at the low. So we are losing money. But you see that this one, MSTY give us the highest rate of return. Also, even in the worst case scenario, your loss is the minimum, right? This is the minimum loss, but actually AIYY is the one, that's another one, that's it too. So if you look at the one, the best case scenario, and then the worst case scenario. The third one, the one that actually, I there's no way I can pick it the best what price all the time. Right? There's no way I can just buy it at the low, sell at the high. So what I do is I have a method. What I do is I try to buy it a day before distribution, just a consistent, just buy it a day before distribution and sell it on the day the payment is received, right? So if you look at that, the distribution was announced on 23rd, right? So what I'm going to be doing is I will buy it a day before that, that is 10/22, and I will sell it on the day the payment is received. Now let's take a look at this one. Right? Let's say first one on 10/22. Let's do this. All right. So 10/22. What was the closing price on 10/22? Let's over here, MSTY. MSTY, MSTY. The closing price on 10/22 was 31.11, right? 31.11. 31.11. Now, and you are selling it on 10/25 closing price, which is 27.62, right? 27.62. So that means we make $113. Not so well. This is actually all these negatives. So let's change this to easy to see that, right? Now, so keep doing the same thing for all other of those, and you will see you'll get the rate of return. Right? Now let's take a look. Let's summarize this over. So now here's what we did. We looked at those three strategies, right? Strategy number one, the best case scenario. We bought at the low of the day, sell at the high of the day, and we calculated the rate of return of the total dollar value of every single one of them. So if you look at this MSTY, AIYY, and SMCY, these three really stand out over there. Now, the second, worst case scenario. MSTY has the lowest loss, AIYY has the lowest loss. SMCY has a little bit high. It's a very volatile, so so. Now looking at the third one, which is the one that's actually, let's do this. Change this to red, so easy to see that. Now looking at the third one, right? MSTY is green. Actually, let's do this. This is the green, right? So three of those has a positive return, rest of them is the negative. Now, what is the true lesson that we learn from this? Number one, not all ETFs are equal. Different ETF produce different rate of return. So it's very, very important to pick the right ETF. Now the question is how to do that, right? So the way I do is on a monthly basis, I do a video on the year-to-date performance of every single one of them. And I try to pick the best one, the one that has the highest rate of return. And if I have to flip that, I use that same thing. If you look over here, look at the MSTY, right? Even though I take a best case scenario, worst case scenario, or I just use my method of buying before a day of distribution, selling on a payment date. In all three cases, this produced a good result. And also on the rate of return, right? And I think I did this one before the monthly one. MSTY is the best performing ETF, right? On the YieldMax ETF. So if I invest on the one that performed the best, it produced the best result, right? So if you look at the MSTY, right? I mean, no matter how you slice it, dice it, either you take the best case scenario, worst case scenario, or you just buy it before dividend and sell it on the payment date, you still make money, right? Same goes for AIYY, right? And SMCY. So the timing and picking the right one is very, very important. Right? So how you do it is up to you. But all I'm trying to do is give you an idea how to do the calculation and look at it. So I hope you enjoyed the video. If you did, please share, subscribe, like, comment, and I'll see you soon with some other video. Thank you and have a wonderful day.